Hello, this is George with the Harmony Trading System coming to you from fabulous Frisco, Texas. And we are going to be discussing this crazy market that is keeping on going up. We are going to discuss certain levels that we need to watch for and the behavior that we see the market exhibit and how we can better take advantage of it this coming trading session. Let's start off with NQ, Nasdaq 100 futures, and we can talk about how the market today gapped up overnight from 83 to 84 into what some traders would call it a runaway gap to 84, 86 and a quarter, and that gap is significant now. Going into this coming session. The bears need to cover that gap in order for it to be an exhaustive gap and price action heading toward 8,000. Otherwise, you're going to get a probability of consolidation with a bullish flag for higher prices. Who would have thought that the market is reversing in such a way? I mean, the market is always a discounting mechanism to future events, and it's an emotional discounting mechanism. So when the market tanked from here over the news from China and or the pandemic, I mean, the way the price is acting is almost like this thing is going to destroy the whole economy and everything is going to go, you know, to shit basically, and you know, it's all over. I mean, that's kind of the behavior the market was doing, and so they discounted that madness that was going on with the pandemic, and this reaction to it, it's almost like a V reaction at this point, is an overreaction on the other side of it. They're acting like this thing is behind us, and we are all clear, and like as if, you know, the consequences of this shutdown is not going to be felt for years, and this thing is not even resolved. So these are two reactions, emotional actions that the market is exhibiting, and in many ways, the probability is that we will go to the mean average. And in this move, the mean average is going to be in and around 80.69. So that's what we're going to be watching in this coming session. We are looking to see if the price can continue to trade under 87.74. If that's the case, we will see the price action kind of consolidate in this inside day and in around these levels around 8,600, and we want to see if that holds or if it fails. If it fails and we continue to trade under 8,600, then, you know, there's a probability that we'll cover this gap and go from there. And so there's channel number one, channel number two. This is channel number two in this sequence, and we broke above it with that gap. So for the bears to take hold, 8,600 need to be traded under for an extended period of time, and also ultimately covering that gap. The longs need to continue to push above that 8,600, and then the 87, 8,800 needs to be, that will be the next move for it. Really unprecedented times, and the way this market is behaving is fairly emotional, but at the same time, you're seeing a little bit of order to how the price action is behaving. We're not getting wild swings intraday, even though we're having an expansion in price action. So that is actually very promising. That means we're going back to business as usual. Now, also, you know, we clear with A&P futures, just one of those It's one of the best clearing firms out in the industry. They reduced their margin. At one point, their margins for trading one contract of NASDAQ 100 future was $15,000. They dropped it to 3,700 and dropped it to 1,500, and now it's back to the original intraday margin of $500 per contract. So that tells you that the volatility is going off the market. VIX is collapsing in a way, and you're seeing the price action moving up. It's hard for me to go long at these levels. So, when I look at my long-term portfolio, there is absolutely no way for me to start looking at equity right at these high prices and say, hey, listen, let me buy the big names and hold on to them for an extended period of time. I'm looking for a pullback at a minimum to the mean average of 80, 60, or that area. Now, if the market shifts this cloud from negative to a positive, you could see the consequences of that as a major move over 6 months, where the market is really kind of trending in a very distinct way. So we're not seeing that right now. This kind of price action will lead to collapse of the ranges into the middle of the trend, and that would be around that 80, 60, 80, 70. So let's take a look at ES. Then we'll go from there to crude oil. Here comes ES. So while this is loading up, just make sure that, here we go. And let's take a look. Same scenario anyway. I mean, you're getting ES went all the way back up to 28.43, and the price action is just kind of pushed lower. So if the bears want to take charge, 27.95.50 and 27.73. So that you need to cover that. Otherwise, you're trying to run up to the 2900. So a level, very important level actually, 2809. You break below that, shorts are going to start taking charge, then the covering of that gap. And let's take a look at crude oil. We talked about crude oil under 26 and also a break below 20 as a target. So let's just see once we see it. And while this is updating, make sure that you subscribe and click on that little bell. So we are posting videos on a daily basis about the market. And if you like this content, let us know. And if you have ideas about how we could improve this information for us, let us know as well. We'd like to hear from you. So here we go. And crude oil. I mean, that is that 26.5 is holding up pretty nicely. We talked about the 23.97 market is sold off today, and now we're opening up and an inside day, a very tight price action with no volatility. So here, we're at that 20 price action. This price action has the probability of bounce in and around here. I wouldn't be buying that bounce. I'll be looking for ways to short it more than looking for ways to buy it. For the intraday trader, obviously you're looking at your 10 tick, 20 tick stops. For the swing trader, you're going to have a bit of an appetite for risk, and you're really kind of looking at rallies within the range of yesterday as a selling opportunity with two lines of defense, 22.44 and 23.59. If you break above those, then you're going to be consolidating on the upper level of this range. Otherwise, once the market opens up tomorrow, I'll be a seller of crude oil and looking for price action to kind of break down below 20 and see how far the intensity of that break. Are they going to really flush it, or are they going to just kind of drip, 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 which is the personality of crude oil, by the way. So as far as prices, let's talk about important prices. One of them is 21.19. That is a line in the sand for the shorts. And also you got yourself 22.17. That's another line of defense for the shorts. And those two need to be protected. Now we have, let's see here. So we are at 21.13. Okay, so that's target number 4 in this sequence, and you could tell where that got triggered. Target 1, 2, 3, 4, and 5. 5 is $8.46. I mean, can we get there? Everything is possible. Really, everything is possible. But the odds are we are going to be in the 20 to the 15 area for some time, if and when the 20 is broken. Okay, so that is our outlook for the market for tomorrow and into the end of the week, and we update that outlook on a daily basis with a video. If you like this content, let us know, and if you don't and you have suggestions, let us know as well. And stay safe, and wish you health, wealth, and happiness, and we see you on the next video.